the banks and the fintechs will grow together. So whether the valuations will increase for banks or for fintechs, I think it's both one stacked up on the other. Because remember, at the end of the day, the money sits in a bank. How much ever digital currency might change, the banks continue to remain the backbone. The technology players build on top of that. And I think that's where there's a happy marriage. And that's something we should all remember, because I think the discourse in general always goes about banks being monolithic institutions and the fintechs being the future. I think one cannot survive without the other. So we should recognize that in the discourse as it's talked about. And yes, banks have a higher degree of responsibility, because remember, while there is a happy marriage, I've also been at Meta, where I was there for 8 months. And if you look at pure technology and pure banking, it's a marriage of incompatibles. That's one of the reasons why, Google has scaled in payments and Facebook couldn't. So there are ways to do things and marry technology with a regulated industry, which I think Google has done well. And I just leave it here to say that, fintechs and banks will be the future, hand in hand together, because like you said, quantum computing is something where we will look at it as banks. Whether it's digital assets, banks will look at it, because obviously as the custodians of the nation's wealth, banks do have the responsibility to ensure we provide our customers with the best possible services and technologies. So hopefully we'll engage with a lot of you in the future. Thank you.
Thank you. Yeah, I mean, from startups perspective, I would only say that there are a lot of guidelines from SEBI and RBI. I request you to go through them. There is a legal consulting organization called Law Octopus. I'm not advocating them, I'm just telling you as a source of information. You can go, and I sincerely suggest you read all the guidelines, because if you're doing a startup and if you don't know the legal guidelines, you're going to end up, you're not going to cut it. So please read. There are payment guidelines, there are wealth management guidelines, there are lending guidelines. Whole lot of suite of guidelines have been given by RBI. In fact, this is the only industry where the government institutions are leading, or at least running along with the industry. So I would like you to keep track of it. And now, in the interest of time, I'd like to open the this thing for any questions. We'll just take 3 questions and then close the panel. Okay. Go ahead. That lady there, yeah, she lifted her hand first. Yeah, I'll come to you later. Yeah.
First of all, good morning to everyone, and thank you for such an insightful session. Thank you all the speakers. I have 2 questions. First question is regarding intermediaries and their importance in wealth advisory. It was very interesting what Sonali ma'am spoke about, and she said that she's going, as a bank, they are going to encourage self-employed people. So my question is, will this automation and the AI/ML technologies reduce the importance of wealth advisors, specifically maybe RIAs in the future? And my second question is a slightly gendered question because of my interest in a startup that I'm trying to work on. Are banks looking to offer gender customized solutions in future?
Anindya, would you like to take first? Then we'll go to Sonali.
The short answer to your first question is no. RIAs will not go out of business because, of technology. Because the way technology is evolving today, AI, ML specifically, Gen AI, more recently, is basically an enabler to some of the things that, RIAs do. By the way, RIAs are growing, just one piece of data for you. We heard about account aggregator. Account aggregator is now being used by 10 crore Indians. 10 crore consents have happened on account aggregator. About 8 crore, customers are registered out there. 16%, which is the second largest number, right? 16% of the flow which is happening on account aggregator is by the RIAs in the country. You'll be very surprised to know and why. Because the PFM, the personal finance management, which is done by the RIA, the account aggregator actually makes it very easy for you to create that whole 360-degree picture for your customers. technology is always going to be an enabler, at least for the foreseeable future. I think, some of the futures that, we kind of have been talking about, or we, watch in movies, etc., they are not going to be a mass reality, in the future. So that's what I would say. And every time a technology like this has come, you would see that the particular, things that we are talking about, it has improved by leaps and bounds, 5x, 10x, because something is enabling you to do, things better. So it helps you to be more creative with your conversations, with your customers, to engage with them better. It's not going to be replacing anytime soon. And that's the reality across how technology touches, many other, things that, people talk about. So that's about your first. The second question was about, I think, BCs, intermediaries.
The second question was a gender question. I mean,
gender question.
Women customize
so the problem, and if we talk about gender, right? The problem today, and it's a serious problem, is that the women workforce, for what reason I don't know, is coming down in India, and that's a serious problem. Because the opportunities are increasing, but as a percentage, this is kind of coming down. Everyone today, every organization that I can think about, including my own, they have very specific products and very specific ways of reaching out to women. But somehow the income opportunities is on an overall basis, right? As the pie is increasing, it is reducing for women. Now, that also has to be kind of somewhere taken care of, and I'm sure, many people, are working on that, including many NGOs. So parallelly, that has to happen. And, there are multiple reasons, for why this also does not take off. The decision maker often in most of the, societies that we live in across, we are a multi-society country, is not being, so there's a single decision maker. And we have seen, for example, if I have, let's say, 100 accounts, in a certain segment, the decision makers are only maybe 30 or 40, which means that in the household, if there are multiple accounts being opened for anything, any financial services product, the decision maker is not 100, it is maybe 30 or 40. So the decision-making ability also depends upon how literacy, grows in the household. How people are able to understand. Some of these are very complicated, top financial services is not very easy. Taking loans could be easy. Personal loans is a very easy product. But investments, insurance, these are not very easy subjects to understand. And, I think somewhere that literacy also needs to play a role.
So we will, in the interest of time, we will quickly move on. Sonali, would you like to make one or two comments?
Yeah, so we have a women's account. You should absolutely get it. Large part of women, as data says, are self-employed. So please go out, get a Giga account. We have a credit card for new to credit. We have very specific offers for women. We have insurance. Not only that, we also have a new investment process. So and I'll come to your intermediaries question second. So for the first time, I think we've created a process where you can invest as much as you want and when you want, which is not your traditional SIP of 10,000 rupees on the 10th of every month hitting your bank account. This is done by the AMC arm of the group, where we've actually created it for self-employed people, because a large part of self-employed are women, and you may have lumpy income, and therefore you may not be able to invest every month. And we know everybody's putting money in SIPs because investments are now, as we've heard from the panel, there's a huge interest in SIPs. So yes, there is a specific focus on women, and banks, we are looking at that very systematically. To your second question on RIAs, I think, look, wealth management is today being far more enabled at scale and democratized because of technology. There I tend to agree with what he just said, that it is not either or, but it is about technology playing a fundamental role in democratization. Because when there's effective democratization, you will actually see a large number of registered investment advisors grow, because they will have a larger number of products to offer. So overall, it will have a multiplier effect in the long run.
Thank you.
Thank you, Sonali. So what we will do is, We will not be able to take any more questions in the interest of time. Okay, I'll just make one final remark.
You can't escape from me. My question is to Sonali. Sonali, the way digitization is happening, in fact, I don't know, I don't remember when I visited any bank. So I never visited for the last several years. And the way things are going forward, do you think there will be any physical bank? If that is the case, what will happen to the jobs that already exist in these physical banks? So what is your perspective going forward?
I'll share that. So very interesting question, Jay. So at HDFC Bank, we are doing both. And let me tell you, we are adding 1,000 branches every year. So there is going to be, banking is a body contact sport. Yes, there is a younger generation that likes digitization. But also we should remember that there's a big growth of phygital in India, which we don't talk about, because not everybody knows how to use digital technology end to end, right? And that's where you have the Bharat and the India divide. So I think you're going to see the two coexist as we are seeing them today. And we will keep, because India is very largely unbanked, right? While you have the Jan Dhan accounts, etc. As he said, there's a very large number of people who are new to credit. There is a lot of innovation that is happening in banking as well. So while we may have got our citizens now with an account with the Jan Dhan drive that was driven by the government, I think banking is a body contact sport. Banks will continue to have physical presence. There will be a more adoption of digital processes within banks. So when you talk about walking into a branch, you'll still see the bank. You may see a very branch in the future. You may not see the kind of branch that you see today. So you'll have a paperless branch. You'll have a highly digitized branch where every process, and today most of the transactions even in our bank are done 80%, more than 80%, and the branches are done digitally.
What will happen to the jobs?
I think the jobs will continue. We are still adding. I think everyone is still adding because we are expanding and we are growing. So I think that that's what I said. Technology brings in a multiplier effect, contrary to the perception being that it is taking away the jobs. The multiplier effect is very, very high because India is a market. Today, India's, this decade, I'm firmly of the belief that the next decade is India's, because remember, we have a demographic population of 28.3 is the average age today of the demography. So if you look at it, the next 10 years are going to be India's, if not the next century, as many people are saying, but definitely the next 10 to 15 years. And you're seeing what's happening in other larger economies globally and what we're seeing in markets like China, etc. So India's just about starting its next S-curve. And remember, China hit a huge bump up in growth, which is where you will see everything growing when it hit $4,000 of GDP per capita. We're just at about $2,500 roughly dollars of GDP per capita. The minute you see us, we are quickly and climbing to 4,000. You see 4,000 and you'll see a new S-curve emerge. So the best is yet to come.
Sir,
we'll have many more jobs.
Thank you.
I would add 2 cents to that. Today, on an average, an Indian uses not more than 1 or 2 financial products offered by a bank. Okay, and first of all, 75% of the people just use saving bank, whoever using a bank. Okay, so now the number of financial products which are offered by any bank are somewhere close to 50 to 70 on an average. Okay, and imagine both the horizontal and the vertical expansion.
Thank you.
Thank you.
Just one point. Technology always takes out the jobs which are very repetitive in nature. Now, repetitive jobs is not done by one person. Each one of us in all our roles, right? We have some repetitive jobs. Anything that we do. We have to remember that technology will eventually take that out at some point of time. But what does that do? Makes that person more productive. And therefore, you move on to a slightly higher level job, right? That's how the economy grows. That's how productivity grows. That's how your GDP will grow. And that's how you will reach 4,000, 5,000 per capita GDP, where the next acceleration will happen.
Thank you.
Thank you. We'll close this. Now, I know you have a lot of questions. Please catch the panelists and ask one-to-one. Okay, thank you.
Thank you so much.